What is going on, everybody? It is Tuki from Tuki Trading here. Hope you guys are doing well. Now, for today's video, I want to make a video covering how to spot out key levels on the charts, just so you guys can get a better understanding of A, where market is likely to reverse, and B, where we'll get those higher volume moves on the charts. So those are pretty much the two main reasons you would even want to look or chart out key levels on your charts. And for me, for pretty much a lot of other traders, we're utilizing key levels within the markets every single day, whether that's looking for a specific entry or just looking for areas on the charts, like I said, where price is likely to reverse, break through, and get those higher volume moves. If you don't know who I am, I've been trading since 2021 for about 5 years now, and I've helped literally hundreds of traders get their start within the market. So let's go ahead and hop on to the charts and make some magic happen here. Beautiful. So let's go ahead and do this. Now, there is a couple of key things that you want to look for in terms of drawing out your key levels. Now, the way that I like to think about it, as simple as possible, is key levels are pretty much just barriers on the charts, right? Barriers where price A is likely to reverse significantly, or B, where price is likely to break through that key level and continue further in that specific direction where it broke through. So there are actually multiple different key levels that you can draw out, that you can look at, but we're going to be focusing on the most simple yet powerful, which is going to be our support and resistance levels. Now, these are very similar to supply and demand zones. I pretty much like to think as your support and resistance levels like mini supply and demand zones. So let's go ahead and hop on to how we can actually find these levels on the chart. So let's go ahead and start with our support levels. Now, when we are looking for our specific support levels, our support is going to pretty much be like the floor barrier, okay? Our resistance is going to be the ceiling barrier. So since we're focusing on the floor barrier, we then want to look for those strong lows that were created on the charts that then led to a strong move to the upside, right? Because it pretty much bounced off that floor and continued to the upside. That's the most simple way I can explain it. So I'm actually looking at a couple of pretty good examples. I have a completely clean chart, so we can do this together and kind of you guys can read out my thought process. But right here, we can clearly see price doing its thing, and then it makes a strong low before price has some move to the upside. So you always want to look for that strong low, or pretty much like the lowest point where price made within that specific trading day or whatever the case may be. So here we can see this is the lowest point that then led to a bit of a move to the upside. So very, very simple, just like if we were to draw out our zone. It's going to be a little bit different, but we're going to get, I like to use the horizontal ray. You can always use, you can also use the horizontal line. So what we're going to do is we're very simple, just going to mark out the bottom of that low. Now, as we can see here, once price then returns back to that low, price respects that level very well, and then we have a strong move to the upside right off of our support level. So like I said, I like to just think of it as a floor, right? A floor where price is likely to A, reverse significantly, or B, break through. Those are pretty much the only two things that can happen in this case scenario. And if it does break through, price is likely to continue that breakthrough pretty strong due to the fact that, like I said, it's a barrier. In order to break through that barrier, you're going to need something pretty strong or a pretty strong movement. So, that's how I like to think about it. So now moving on to another example of a support level. Now it doesn't always necessarily need to be the lowest low when looking for support. One of the other things that I look for is essentially once we have a bit of consolidation and then leading to a base or a move up stronger to the upside, that is again another example of support that you want to look for. Pretty much a strong low then leading to a strong move. That's pretty much what our support levels are. So right here, as we can see, a little bit of a consolidation before a strong move up. So very simple. Let's just go ahead and mark out this low here, which is considered our support level. Another example, as we can see, next time price then reaches our support level, what happens? We get a strong rejection and then reversal back to the upside. Pretty strong. You can see right off of that support level, price pretty much just shot up. So boom, let's go ahead and find another example of support before then moving on to our resistance. Now another thing that you can also draw out that works pretty well is marking out your pre-market lows and pre-market highs. These are pretty much always going to be different levels that you can draw out that tend to work out pretty well. So obviously your pre-market lows just being your support levels, and then your pre-market highs being your resistance levels. Or right where market opens, that low or that high you can always mark out. So in this case scenario, we can see right when market opened up here, this candle, right where it marked out, or sorry, right where it opened up, we can mark out that low, which would be the market open low. And as you can see, once price then taps in to our market open low, we get that same treatment, right? We get a little bit of rejection and reversal right at that level, then leading to a strong move to the upside. So that's another way that you can draw out and look for your key levels, is really just marking out those market open lows or market open highs, or pre-market lows and pre-market highs. So an example of your pre-market low would just be something like this. So it looks like this is pre-market right here, this whole shaded area. So if we were to mark out the low of pre-market, this would be right here. Let's mark out that low, which would be considered our support level. Let's get rid of everything else so it's not as confusing. And as you can see, once we tapped into that low, we did get a bit of, a slight hold / rejection back to the upside. But once price really broke through that level, like I said, once price does break that barrier, it breaks it pretty strong, meaning it continues to move in that direction. So boom, we broke through and continued to move to the downside pretty strong, right? So perfect. That would be another example of our support level, and also just a couple of key things I wanted to mention in terms of how you can find more of these levels. Moving on to an example for our resistance levels. Now we're going to do multiple different examples in terms of marking out pretty much just the strongest, highest point before we had the move down, and then also marking out some open market highs and pre-market highs like I mentioned earlier. So right here I actually see a perfect example, right? Within this trading session, we see the highest point being made, then leading to a strong move to the downside, right? So very simple. We just get our horizontal ray out, mark out that highest point. Keep in mind we're focusing on resistance now. Therefore, we want to be focusing on those key strong highs, right? So boom, we marked out that high. We can then see once price returned back to that resistance level, which was that key high that we just marked out here, we're getting the same treatment like how we saw at our support levels, right? A bit of price holding, rejecting, and then reversing back to the downside right off of our resistance level, right? So there is a perfect example right there. Now let's go ahead and focus on marking out a pre-market high, right? Then we'll focus on an open market high. So what we would want to do here is, let's get rid of this, and then let's focus on a open market high. So in this case scenario, open market high would be looks like right here at this candle, okay? So this candle that I'm circling is where the market opened up, right? Therefore, we would want to mark out the high of that candle since it is the open market high. So boom, that's exactly what we did. We now have our resistance level. Now, a little bit different from what we've been covering with our resistance levels and with our support levels. Rather than getting a rejection, we actually get a breakthrough. But what did I mention earlier? In order for price to cause that breakthrough, volume needs to be pretty strong, meaning those buying orders at that resistance level need to be significantly stronger than usual to obviously cause a stronger move. Now that's exactly what we got here. We did see price starting to hold a little bit, starting to reject just a tiny bit, but that buying pressure was way too strong and ultimately just pushed price higher. So like I said in the beginning of the video, our key levels can really only present us with two things: A reversal, or B, a strong breakthrough. And that's exactly what we got here. Price didn't respect this resistance level here, which was marked by our open market high, and it then led to a pretty strong move to the upside. You can see pretty much once we broke above this high here, price just literally exploded. So that would be an example of our resistance level and an example of resistance not rejecting but breaking through. And obviously it would be vice versa for support. Let's say in this case scenario at this support level right here, price failed to reject. Obviously that selling pressure would be or it would be strong enough to break through that barrier and then continue a stronger move back to the downside. Now, let's go ahead and mark out a pre-market high for our resistance area. Excuse my dog also in the background. So right here we can see this would be pre-market, therefore we would want to just mark out the highest point of pre-market, which would be right here. So let's get our ray out, mark out the highest point of pre-market, and what do we see here? Like I said, we always want to think of these levels as a barrier. So once price came to that barrier point, those buying orders were simply just way too strong, which then led to that strong breakthrough and continuous move to the upside. So typically when we are getting those breakthroughs, I'm not saying 100% it's going to break through and explode, but usually it tends to break through and continue that momentum that obviously caused that breakthrough, which was that strong buying momentum. Vice versa would be the case for our support level. So let's find another example. I believe, okay, we did already cover that. So let's just go back a little bit. Now, what do we have here? Perfect. This is actually a great example. So we see our pre-market trading session here, which is pretty much all of this right here. So where would obviously be the highest point within this pre-market trading session? Obviously right here. Therefore, we want to mark out the high of pre-market, which is then our resistance level. And what do we see once price then returns back to that resistance level? We are getting a hold within price and a rejection and reversal back to the downside, right? Obviously due to the fact that when price does return to this level, those sellers then step in again heavier like how they did previously. Like I said, very similar to our supply and demand zones. That's why I like to think of these as our mini supply and demand zones. Now, I actually see another really good example we can cover, but it's going to be a support. So let's go ahead and actually cover that now. We see pretty much multiple points of a strong low being created here before a strong move is then inputted to the upside. So let's go ahead and just mark out. We can do this strong low here. It'd honestly be the same if we were to do this one. So let's go ahead and do that. So as we can see, we see a strong low being created. then leading to a pretty decent strong move to the upside, right? It doesn't need to be like the strongest, biggest move. As long as you see a strong low or strong high being created, then leading to an opposite move, like how we saw here. We saw a little bit of price moving down, then we saw a strong low being created, which then led to a move to the upside. So that's exactly what we want to be looking for. So we mark out that low, which would be this point here. And as we can see, once price then returns back to our support level, looks like right here, it missed it just by a little. So we're not going to count that. So let's only count where price actually touched our support level. Right here, we can see it missed it by just a tiny bit, right? But finally, once price actually tapped into our support level, what do we see here? We're seeing price holding very well, then leading to a strong move and push to the upside off of our support level that was created with that strong low. So that's exactly how we are going to be drawing out these levels. And there are multiple ways that we can draw out these levels, like I mentioned, whether that's looking for the pre-market highs, pre-market lows, open market highs, open market lows, looking for strong lows or highs being created before then leading to a strong move to either direction. So there are multiple different ways that you can draw out these levels. And if you're wondering, like, why are we using these levels? Like I mentioned earlier as well, we're using these levels to determine where certain areas on the charts are likely to present us with some sort of rejection, some sort of reversal, or even a breakthrough. And we don't even have to use these levels as entries. You know, we can use them as exits. We can use them as take profits with levels, which I like to do a lot of the times. Because if I have an idea of where price is likely to reverse, why don't I take profits at that point before price does reverse? So let's say in this case scenario, I were to enter a trade long off of this support level right here. What I would do is I would look for my nearest key level, because that key level, I know price is likely to provide us with some sort of rejection and reversal, and I want to take profits at the highest point possible. Therefore, we want to look for an area on the charts where we can do that before price does reverse. And that's another one of the big key factors that you can use when it comes to these support and resistance levels. So let's go ahead and do one more example before we wrap it up and go from there. So let's actually just switch to a whole different stock and use the same principles that we've been using with what we were just looking at with SPY. So let's go ahead and remove everything here and pretty much just look for a strong high or strong low being created on the chart. So right here, I do see a pretty strong high that then led to a move to the downside right here as well. So it looks like we have a strong high here, then leading to a pretty strong move to the downside. So let's go ahead and look at this and see how price reacts to this level. So boom, we marked out our resistance level here, and what do we have? We can see that price did tap into this level. We got a bit of hold within price / rejection to the downside. Nothing too crazy, but pretty shortly after, you can see that those buyers were simply just way too strong. They broke through that barrier and continued that buying momentum. Nothing crazy, but obviously enough to know that that bias within price, or that momentum within price that we're currently having, is switching, right? So instead of getting that selling momentum like how we would expect at that resistance, price simply just broke through that level, therefore giving us the indication that that selling momentum is likely not to be the case, right? We'd want to trade within that buying. Obviously, market closed shortly after. You know, we were a little bit choppy, throughout this period here. So let's actually just do one more example before we close out the video. Now, right here would actually be a pretty good example. I want to find a good support that we can look at. It looks like this is actually a pretty solid example right here. So looks like we have, this is our open market trading session. We see the lowest point within this trading session, which would be right here. So a strong low being created, then leading to a pretty strong move to the upside. Keep in mind, the stronger of a move that you see after that strong low or strong high, the stronger that support or resistance level is likely to work out. Okay, so I'm not saying always look for the biggest moves, the biggest reversals, but something like this is like perfect, is what you want to look for. So boom, we want to mark out that low. We can then see next time price taps into this low, aka this support level that we have marked out. What do we see? We see a beautiful rejection and reversal back to the upside, pretty strong to the upside right off our support level. Literally the lowest point before price exploded to the upside. So that's going to be it for this video. I'm going to make a second part for this video as well, covering different key levels and also how you can actually trade with these, going more in depth to that. But for this video, I really just wanted to cover how we can exactly spot them. So I hope you guys learned something new for this video. If you guys have any questions, please feel free to leave them down below in the comments. I'm posting every single day trading content on my Instagram, so I definitely recommend you guys go follow me there. Link will be in the description. And other than that, go ahead, catch some snipes on the charts, some great trades on the charts, and I will see you guys next time.